Hello and welcome to ActivTrades News. The ECB pledges to extend easing until March 2017 or beyond. Is 2016 the year that European stocks will finally start to outperform the US again? Selling US and buying European shares remains the favoured call among strategists betting on equity performance in 2016, with the argument favouring further gains for European resting on how the US stock market has tripled from its nadir of 2009, while the value of the FTSE Eurofirst 300 index has merely doubled. Now, with the Fed poised to raise interest rates, US stocks valuations stand above the long-term average and the outlook for earnings is uncertain. Why is investor alarm at the riskier end of the US corporate bond market rising? How messy could the Fed increase get? The greatest monetary easing cycle in the history of the US has left a mind-boggling amount of cash floating around in the economy. So, as the Fed prepares to raise interest rates from near zero as soon as next week, investors are on edge. Today we're joined by a special guest, Kim Watson from ActivTrader. Thanks for joining us. Now, regarding the story about the ECB pledging to extend the easing, do you think that they're trying to leave something back in reserve for a little bit later on?
In terms of the extension, it really shows that the ECB are unsure of the future. They've reduced by sort of a minimal amount effectively. There was some discussions yesterday, and Draghi's comments actually made it suggest that we could see interest rates increase quicker in Europe than previously thought, so that may have a bearing on the recent decisions.
Do you think Mario Draghi was keeping his weapons of mass destruction for another day?
Quite limited in what he can do now. They've used many of the things open to them, so I think they may be relying on the effects of the US interest rate increases, making hopefully for them the euro weaker, which would help their exports and also create inflation as a consequence.
Do you think that the international developed economy is in an early stage of the cycle?
It actually suggests they're quite the opposite. They're actually in the late stages of the cycle, and the fact that we're seeing growth in China, India, Australasia, all reducing. So at this stage we're in the later parts of the cycle possibly, and as oil prices are reducing, if oil and commodities price start increasing, I think we could easily say we're in the early stages. Until they start increasing, we're still in probably the later stages of a cycle. But the cycles themselves are completely out of kilter the way the world economy is run these days anyway.
Thanks very much for joining us. Wednesday, December the 16th, sees the US Federal Open Market Committee, the FOMC report, being released, which includes the FOMC's projections for inflation and economic growth over the next 2 years, and more importantly, a breakdown of individual FOMC members' interest rate forecasts. Thursday, December the 17th, is the German Information and Forschung Business IFO Climate, a highly respected survey due to its large sample size of about 7,000 businesses and historic correlation with German and wider Eurozone economic conditions. And that's it for this week. Thanks for watching and see you next time.